So you're trying to figure out, what should I invest in? Real estate, stocks, crypto, bonds? Today, I am going to break down a very commonly asked question. Should I invest in real estate or should I invest in stocks? For some people, stocks might be better. For others, real estate might be better. You should understand what the differences and the strengths and the weaknesses are of each one. And usually when you do, the right answer for you becomes very clear. All right, so let's start off with what I think is the most important thing to understand. Real estate makes you money in 5 ways. Stocks make you money in 2 ways. All right, so the first way that real estate makes you money is very similar to how stocks make you money. And this is the buy low, sell high idea. When real estate rises in price, you gain equity and that makes you money. But you also make money in real estate in other ways. One obvious one would be paying down your loan. So unless you're buying your property in cash, you're probably taking a loan to buy this property. And as you make a payment every single month, that loan balance gets less and less and less. And if you're doing this as a rental property, your tenant is the one that's actually paying that loan off for you, which is awesome. As a side note, a lot of tenants will complain that they think it's cheaper to rent than to buy. But if you look at this over a 30-year period where rents keep going up and your house payments stay the same, it's never cheaper to rent in those situations. And at the end of the 30 years, you could have a paid off house of your own or a paid off house of your landlord. One of the common misconceptions in this argument is people compare buying stocks to buying a property to live in for yourself. And it becomes very misleading. In fact, it's one of the reasons why I want to make this video. I've heard people make the argument that, hey, if you buy stocks and they're going to go up by this much, it's more than what your house could actually go up by. And stocks don't cost you any money, but you have to pay money to own the house. You have maintenance, you have a mortgage payment, you have property taxes. They're only comparing real estate going up in value to stocks going up in value. And then they're only throwing in the way that real estate costs you money. And that's how this argument that stocks are better than real estate is always phrased. Now, I don't have a problem with people telling others to invest in stocks. My problem is when they frame the conversation in an unethical or dishonest way. If you're buying a rental property, that is very different than buying a house to live in for yourself. The rental property is actually earning income. It's not only earning enough income to pay for all the expenses that I mentioned, it's earning more income than those expenses so that it's actually making you money every single month in cash flow. When you do it right, you bring in more every month than it costs to own it. Now, this compares to the second way stocks make you money, which is basically a dividend. Some stocks, not all, will pay a dividend, which functions as a form of cash flow, but it's almost never as good as what you're going to get with real estate. And it definitely doesn't go up at the same way. But wait, there's more.
But wait, there's more.
You actually make more money in real estate than just those 3 ways that I mentioned: appreciation, loan pay down, and cash flow. You also make money in real estate by saving on taxes. Short answer is you can depreciate real estate, which is an accounting term, so that the money that you make in your cash flow can be offset by the depreciation of the asset, which is basically your house falling apart. Can't do that with stocks. So if you make $400 in real estate versus $400 in stocks, you're paying much less taxes on the $400 in real estate. And the last way that you can make money in real estate isn't exactly making money, but it functions in a very similar way. We're going to call it a bonus. So you can actually pull money out of real estate when it's gone up in value and reinvest that money and not pay taxes on the difference. You're also going to have some closing cost fees that are added to your balance. So if you owed $400,000, you then take out a loan for $500,000, you're going to be getting back $100,000 more, but 10 out of that 100 might be going towards your closing costs. So you actually only get to keep $90,000. Up next is something that should not be considered lightly. It's actually very important. And this has to do with the work involved between investing in real estate versus investing in stocks. All right, so say that you bought a rental property. Before you bought it, you had to analyze properties. You had to choose an area. You had to drive around and see houses with an agent. You had to get pre-approved for a loan. Then you finally land the deal. You got to sign a lot of papers to get this thing to close. You have to give a lot of documentation to your lender. You have to sign a lot of stuff with title and escrow. Then you finally get the keys to your house and the job just starts. Now you have to get it ready for a tenant. You have to take pictures or get it cleaned up and repaired so that it's ready for someone to live in there. You have to advertise those photos and screen for tenants. If you don't do that, you have to pay a property manager to do it. So even though it's not more work, it's still a little bit more money. You see where I'm going? There's more and more work. Then you have maintenance and repairs, and God forbid the tenant leaves. Now you got to go turn the unit, which means more time, more effort, and more money to get it ready for the next tenant. Let's compare this to buying a stock. You research the stock, you choose the one you want, you click a button. This is why many people invest in stocks that don't invest into real estate. And if we're going to be fair about this, we do need to include the work that is spent investing in real estate, and then include that in the cost of actually buying real estate, because it's not fair to compare it directly to stocks. All right, let me take a quick break in the video and just ask you to like, share, and subscribe if you're getting value out of this video, especially if you think it's cool. Which of these has a bigger upside? Real estate has no limits to its upside, and that's awesome. In addition to the value of the asset going up, there's also unlimited upside to the value of the rents going up. If you're in that area where rent control, there is some limit to the upside, but it doesn't actually say you can't raise rents past a certain point. It says you can only raise them so quickly. But every year that rents go up and your mortgage stays the same, the gap between them becomes bigger and bigger, and so does your cash flow. Now let's talk about stocks. Stocks also have unlimited upside. There's nothing that stops a stock for increasing in price. The only difference is stocks only make you money when they go up. That's the only way. They don't have a rent component to them. Really, you're only making money in a stock when it becomes worth more than what it was when you paid for it. All right, so we discussed the upside. Now let's get into the downside. Real estate can go down in value. We saw this happen in the years 2009 through 2013, 14, depending on where you were, where the price of the asset actually dropped pretty significantly. Now, here's the cool thing. When the price of real estate drops, you don't actually lose money. You may lose money on paper. You only lose money when you sell. So if you keep a tenant in there and you keep someone paying and you have enough money in reserves that you don't actually lose the property, you just wait for values to go back up again, and you're good. Now let's talk about stocks. Unfortunately, stocks don't have any kind of downside protection. If you just buy a stock straight up traditionally and the value of it plummets for whatever reason, there's nothing you can do. You can hold it and wait for it to come back up. Just like real estate, if you don't sell right away, you don't actually realize that loss, but you're not making money in the meantime. So real estate has a protected downside and stocks do not have a protected downside. I actually want to take a second to help you understand something that gets framed incorrectly when we're talking about real estate versus stocks, which is your true return. All right, let's say you've got $50,000 and you're going to put that as a down payment on a property that is worth $250,000. So you're putting 20% down. Now let's say that property that you bought for $250 appreciates to $300. Now that would be a 20% increase in the price of the asset. Let's compare that to a stock. You buy $50,000 worth of stock instead of a $50,000 house. That stock also goes up by 20%. 20% of the $50,000 of the stock you own is 10 grand. So the stock that you bought went from 50 to 60 if it had a 20% increase, and you made $10,000. Now let's go back over here to real estate. How much did you make when your real estate went up 20%? You went from 250 to 300. That's a $50,000 increase, which is the same that you put in the deal. You put $50,000 down, it's gone up by $50,000. That means you made a 100% return. So with leverage with real estate, I made a 100% return on the same increase that I only made a 20% return on stocks. That's the difference between 50,000 and 10,000. Are you seeing where I'm going with this? Leverage makes it so that your returns are amplified a lot. Now, it also increases your risk. And that's something that a lot of people will poo-poo about real estate. They'll say, well, yeah, but there's risk in leverage. That risk is there, but it's mitigated by cash flow. This is why we're constantly talking about invest in real estate wisely. All right, I hope that you got value out of this video. Do me a favor, make a comment in the comment section below and let me know if I opened your eyes about anything, if I said anything you didn't realize, what you liked about it, or what you think you're gonna do. Be sure to check out some more of my other videos, and I will see you next time.